As we venture into 2025, the landscape of investing continues to evolve, shaped by technological advancements, demographic shifts, and changing economic conditions. For long-term investors, exchange-traded funds, ETFs, have emerged as a popular vehicle for achieving growth due to their inherent diversification, liquidity, and cost-effectiveness. When considering the best ETFs for long-term growth, it's essential to focus on sectors and themes poised for expansion, as well as the underlying indices that have shown resilience and potential for significant returns. One of the most compelling areas for growth is technology, particularly as the digital transformation accelerates. The technology sector has historically been a strong performer, and with the rise of artificial intelligence, cloud computing, and cybersecurity, ETFs that focus on these themes are likely to continue thriving. The Invesco QQQ Trust, which tracks the Nasdaq 100 index, is a prime example. This ETF includes major players like Apple, Amazon, and Microsoft, companies that are not only leaders in their fields, but also innovators driving future growth. As more businesses and consumers rely on technology, the QQQ ETF stands as a robust option for long-term investors looking to capitalize on this ongoing trend. Another promising area is renewable energy. As the world increasingly prioritizes sustainability and moves away from fossil fuels, ETFs that focus on clean energy are becoming increasingly attractive. The iShares Global Clean Energy ETF is one such option, providing exposure to companies involved in the production of renewable energy, such as solar and wind power. The global push for net zero emissions by 2050 is likely to propel this sector forward, making it a worthy consideration for investors seeking long-term growth. With government incentives and increasing consumer demand for green solutions, the clean energy sector is poised to flourish, and this ETF offers a diversified approach to tapping into that potential. Healthcare is another sector that presents a wealth of opportunities for long-term investors. The aging population and advancements in biotechnology are driving growth in this field. The Healthcare Select Sector (SPDR) Fund is an ETF that targets companies in pharmaceuticals, biotechnology, and medical devices. With the ongoing development of innovative treatments and technologies, coupled with an increasing focus on healthcare accessibility, this sector is likely to see sustained growth. Moreover, the pandemic has underscored the importance of healthcare infrastructure, which may lead to increased investment in this area. As such, this ETF could be a solid addition to a long-term investment portfolio. Real estate investment trusts, REITs, also deserve attention for their potential for long-term growth. The Vanguard Real Estate ETF offers exposure to a diverse range of REITs, which can provide both capital appreciation and income through dividends. As urbanization continues and more people seek rental properties, REITs that focus on residential, commercial, and industrial real estate are likely to benefit. Additionally, the post-pandemic recovery may lead to increased demand for commercial spaces, making this ETF an attractive option for investors looking for stability and growth in their portfolios. For those interested in international markets, the iShares MSCI Emerging Markets ETF is a compelling choice. Emerging markets often present higher growth potential compared to developed markets, driven by rising middle classes, urbanization, and increasing consumer spending. This ETF provides exposure to a wide array of companies in countries like China, India, and Brazil, which are poised for growth as their economies expand. While investing in emerging markets can come with volatility, the long-term potential for outsized returns makes this ETF a strong candidate for growth-oriented investors. The rise of the digital economy has also given birth to a new wave of ETFs that focus on disruptive innovation. The ARK Innovation ETF is at the forefront of this trend, investing in companies that are revolutionizing industries through technology. This includes sectors like genomics, fintech, and autonomous vehicles. While this ETF can be more volatile due to its focus on high-growth companies, its long-term potential is significant, especially as these innovations become more integrated into everyday life. For investors willing to embrace some risk for the chance of substantial returns, the ARK Innovation ETF may be an enticing option. As we look towards the future, it's also necessary to consider the impact of inflation and interest rates on investment strategies. The iShares TIPS Bond ETF, which invests in Treasury inflation-protected securities, offers a hedge against inflation while still providing some growth potential. In an environment where inflation may persist, having exposure to TIPS can help preserve purchasing power while still allowing for some capital appreciation. This ETF is particularly relevant for conservative investors who want to ensure that their portfolios remain resilient in the face of economic uncertainty. Moreover, the rise of ESG, environmental, social, and governance investing, is transforming how investors approach growth. The iShares ESG Aware MSCI USA ETF focuses on companies with strong ESG profiles, reflecting a growing trend where investors seek not only financial returns, but also positive societal impact. As more investors prioritize sustainability and ethical practices, companies that excel in these areas are likely to outperform their peers, making this ETF a timely choice for long-term growth. In addition to sector-specific ETFs, investors should also consider the benefits of broad market exposure. The Vanguard Total Stock Market ETF provides a comprehensive view of the U.S. stock market, including small, mid, and large-cap stocks. This ETF is designed for those who want to capture the overall growth of the U.S. economy without having to pick individual stocks. With a low expense ratio and a diversified portfolio, it serves as an excellent foundational investment for long-term growth. Investing in dividend growth ETFs is another strategy to consider for long-term investors. The Vanguard Dividend Appreciation ETF focuses on companies that have a history of increasing dividends over time. These companies tend to be financially stable and may provide a buffer against market volatility. Additionally, reinvesting dividends can significantly enhance total returns over the long haul, making this ETF a practical choice for those looking to build wealth gradually. As we analyze the best ETFs for long-term growth in 2025, it's crucial to remember the importance of diversification. A well-rounded portfolio that includes a mix of sector-specific ETFs, broad market exposure, and those focused on income generation can help mitigate risks while positioning investors for growth. The key is to align investments with personal financial goals and risk tolerance, ensuring that the chosen ETFs fit within a broader investment strategy. The world of investing is filled with opportunities, but it also requires careful consideration and ongoing education. As trends shift and new technologies emerge, staying informed about market developments will be vital for making sound investment decisions. Investors should regularly review their portfolios, reassess their strategies, and make adjustments as needed to stay on track for long-term growth. In conclusion, the best ETFs for long-term growth in 2025 encompass a diverse range of sectors and themes, from technology and renewable energy to healthcare and emerging markets. By selecting ETFs that align with future trends and economic shifts, investors can position themselves for success in an ever-changing financial landscape. Whether through broad market exposure, sector-specific investments, or a focus on ESG principles, the right mix of ETFs can help build a resilient portfolio capable of weathering market fluctuations while capitalizing on growth opportunities. As we move forward, the key will be to remain adaptable, informed, and focused on long-term objectives, ensuring that investments not only grow but also contribute to broader financial goals.